All right, let's talk about Robinhood. Today, we're strapping in for what has been the ultimate roller coaster stock. I mean, seriously, over the last 6 months, if you are a shareholder, you have been on one of the most intense rides on the entire market. And to really get a sense of just how wild it's been, you just have to look at the chart. Just take a look at this. Back in October of 2025, right after it joined the S&P 500, the stock was just flying, hitting a peak of over $153. Then, well, the bottom completely fell out. By March of this year, it had cratered all the way down to around $69 a share. But in just the last few weeks, a blistering recovery, shooting right back up into the high 80s. It's a textbook roller coaster. So you gotta ask the big question, what on earth is driving this chaos, right? How does a company go from being an S&P 500 darling to crashing nearly 54% from its peak, only to stage this kind of dramatic comeback? Well, that's exactly what we're gonna break down today. Okay, first up, let's perform an autopsy on that massive sell-off. Because this wasn't just some random drop. It was literally a perfect storm of negative news and bad vibes that all hit at the exact same time. So what's really fascinating here is how all these different pressures just piled on top of each other. First, you had the crypto winter. That was a huge one. Bitcoin plunged about 37%, which meant Robinhood's crypto revenues took a 38% nosedive. Then, that very same quarter, they missed Wall Street's revenue targets. On top of that, their user growth was slowing down. And to cap it all off, a whole wave of analysts from big names like Morgan Stanley started slashing their price targets. It was just a brutal, brutal combination. But wait, there was another piece to this puzzle that really spooked the market. As the stock was hitting these multi-month lows, some very important people inside the company were selling. In early April, the CEO himself, Vlad Tenev, sold over $26 million worth of his stock. Now, to be fair, this was all part of a pre-planned, totally legal trading plan, but let's be real, optics and timing are everything. When you're a regular retail investor and you see the CEO cashing out a huge stake while the stock is tumbling, it sends a signal, whether it's fair or not, that maybe there's a lack of confidence at the top. And then, just as it felt like things couldn't get any worse, the story completely flipped. I mean, two massive, game-changing catalysts pretty much came out of nowhere and totally reignited the stock. So let's break down exactly how this incredible rebound happened. So first, we need to talk about something called the Pattern Day Trader Rule, or PDT rule. For decades, this thing has been the single biggest barrier for active traders with smaller accounts. Basically, if you wanted to make more than 3 day trades in a week, you were required to have at least 25 grand sitting in your account. For Robinhood's core user base, that's a huge hurdle. And then, in the middle of April, the SEC got rid of it. Poof, gone. Just like that. The $25,000 floor, gone. The trade limit, gone. This just perfectly illustrates how massive this change really is. It completely unshackles Robinhood's most active users. And the thinking is it's going to drive a huge increase in trading volume and, of course, revenue. And the market got it immediately. The day after the SEC made the announcement, Robinhood stock just exploded. It shot up over 10% in a single day. This wasn't just a little bump. This was the market fundamentally reevaluating the company's entire potential. Now, as if that wasn't enough good news, another bombshell dropped right around the same time. Robinhood landed a super high-profile government contract, basically positioning itself as a core piece of the country's financial infrastructure. They are literally building the technology platform for the new Trump accounts, this government savings program for kids. Now, BNY Mellon is the main financial institution, but Robinhood is the engine under the hood. And strategically, this is a masterstroke. It gives them access to millions of brand new customers, literally from birth, and wraps the entire Robinhood brand in the credibility of the US Treasury. So, with these two massive wins in their back pocket, let's switch gears and really look at the long-term bull case. Why are some investors betting that this rebound is actually just the beginning for Robinhood? The company's new CFO, Shiv Verma, he laid it out perfectly. He's basically framing those recent stock lows as a historic buying opportunity, arguing that the market just doesn't get Robinhood's true potential, at least not yet. See, the whole bullish argument is that Robinhood isn't just a trading app anymore. They are building a financial super app. It all starts with their core trading business, sure, but then you layer on the Robinhood Gold subscription, which already has over 4 million paying subscribers. Then they're moving into long-term assets with banking and retirement products, and now they're pushing into totally new frontiers like prediction markets and these big government contracts. But of course, it's not all sunshine and rainbows. We have to look at the other side of the coin. So what's the bear case? What are the really big risks that could totally derail this growth story? So the single most crucial point for the bears is this. At its heart, no matter what else it does, Robinhood's revenue is still incredibly sensitive to the whims of the market, especially crypto. When the markets are hot, Robinhood thrives. When they cool down, they suffer. And when you dig in, the list of concerns is pretty significant. Their dependency on crypto is a major one. That whole payment for order flow model, the core of their business, is always in the regulatory crosshairs. The insider selling we talked about, that's still an overhang. And the competition, it is fierce. And finally, the stock trades at a really premium valuation, about 44 times earnings, which basically means there is very little room for error. Any misstep could get punished harshly. So we've seen the plunge, the wild rebound, the bull case, and the bear case. Let's wrap things up by looking at what's coming next, because believe me, the road ahead is absolutely packed with make-or-break moments for this company. This slide right here, this is your cheat sheet for the next few months. Q1 earnings are coming up any day now, and everyone's going to be watching user growth and crypto revenue like a hawk. Then, come May and June, we'll get the first real data on how that PDT rule change is actually impacting trading volume. And then in July, the Trump accounts officially launch. Each one of these is a major test for the stock. Ultimately, this is the question that every single investor has to answer for themselves. Is Robinhood truly evolving into a diversified financial super app with real long-term staying power? Or is it, at its core, just a high-risk, high-reward bet that will always be tied to the boom and bust cycles of the market? The next few months are going to give us a much clearer picture. And finally, just a quick and really important reminder, this explainer was put together for educational and informational purposes only. It is not financial advice. All investing involves risk, and you should always do your own thorough research and maybe even talk with a professional before making any investment decisions. Thanks for tuning in.